Greetings again, amazing traders, and welcome back to this video. In case you have been following along, we've been doing a market review on GBPUSD using the Asian range or the ICT power of 3. So today we are going to look at what happened this trading week. If you watched the last video, we already did the market analysis or market review for Monday and Tuesday. So we are only going to continue from Wednesday to Friday using the Asian range. Alright, so if you have been following along, we say the power of 3 is simply accumulation, manipulation, and distribution. And we say that the accumulation always occurs during the Asian session. We want to see manipulation during the London session, and then distribution during the New York session. And we said our time frame simply starts from 8 p.m. to midnight for the Asian range, and we are going to mark that Asian range high and low, and then we are going to wait for the market to run on either side of the liquidity. Then we can look for our entry opportunities. So on Wednesday, let us look at what happened. Just to mention that the indicator that I introduced to you, it kind of have some drawbacks. Like, it doesn't actually mark the Asian range if the Asian range doesn't make up to 20 pips. Okay, so it can only mark the Asian range if it is up to 20 pips. I mean, the range, the low and the high should be within 20 pips range, otherwise it's not going to mark it. So for that reason, we are going to do it manually. Please just follow along again. Okay, so I am going to turn off the indicator so that we can do it manually. All right, thank you so much. So let us look at Wednesday. On Wednesday, we are just going to jump straight into the strategy anyways. So we are going to look at the start of the Asian session, which is at 8 p.m. New York time, up to midnight New York time, which is 00. Okay, like we have been doing already. So we are going to mark the high that was formed during that session and the low that was formed during that session, so we can have our range, our Asian range. Actually, let me do some settings here. Style, I'm going to remove this middle line and I'll keep it this way. All right, so this is our range, our Asian range that was formed on Wednesday. What we want to do is we want to mark the midnight opening price. I am just going to use this one. This is the midnight opening price, the first candle that opens at midnight. Okay, always make sure that you do your labels. Over here, you have to label it as what? Your Asian highs, buy side liquidity. Okay, always make sure that you label it, please. And then right down here, you are going to label it your Asian lows, sell side liquidity, the lows that was formed during Asia, like so. You can do this as well so that your work will look clean. Okay, in case you don't want to do it, it's okay. This should be your Asian highs, buy side liquidity, and you should always position it to the top. Let me do so, and then left. Okay, preferably like so. All right, and then this one should be the Asian lows. I shouldn't even do this actually for the sake of time. Asian lows. Sorry, I'm using my phone. Okay, sell side liquidity, sell side liquidity, and this one should be your bottom and left. It's very stressful when you're recording with your phone. Okay, just bear with me. Yeah, something like this. Okay, so this is actually what we have here, and this, remember, this vertical line or this horizontal line is actually the midnight opening price. Okay, which is 00. Maybe I should do it this way. You can extend it right up to 3 p.m. so that you can study how the market is going to treat that level. This one is the midnight opening price. Let me just do it this way. New York midnight opening price. Okay, which is actually your 00 hours. Okay, like so. And I'm going to position it to the middle and right. Okay, middle and right. All right, something like this. You can position it at the top. It all depends on you. There's no problem. So what is the condition? The condition is if we are bearish we want to see a run on buy side liquidity, and then we'll look for sell opportunities. And if you are bullish, we'll look for a run on what sell side liquidity, and then we are going to look for buy opportunities right down here. All right, so let us see what happens on Wednesday. All right, so when the market opened, we saw the market trade above the Asian highs. Look at how it respects the midnight opening price. Look at how price stays here. I'm always insisting that you should pay attention to what the midnight opening price, because it acts as what a classic support and resistance. If I have to speak retail, okay, a classic support and resistance, you're always going to see price react at the midnight opening price. Look at how much time the market spends here, okay. And I also say that you can also buy at, okay, at or below the midnight opening price, and you can sell at or above the midnight opening price, okay. You can sell below also. You've seen me done that, okay. So look at what happened. The market opened, and then we saw price trade above the Asian highs, taking all the Asian highs buy side liquidity, and then a shift in market structure occurred here. If you go to the lower time frame, which I'm going to do right away so that you can see what I'm saying, you are going to notice that there was actually a market structure shift over here. Even if you have to go right down to the 1 minute, there's a market structure shift that occurred here, okay. So you could actually be selling here. Okay. In case you missed that entry, no problem. We saw price trade down, shifted structure right down here, and then created an imbalance over here, which is what a fair value gap. So when price returns to that fair value gap over here, you could actually be taking your sell right here, okay. In case you missed the first entry, sorry about that, I should take the next one. This could be your sell over here. Oh, what I meant is, I'm sorry. Yeah, this will actually be your sell over here. Stop loss above here, like so, depending on your risk appetite, okay. And then you could target just the Asian lows, sell side liquidity. And what have you been doing? You have been targeting just what? One standard deviation. So you are going to use your Fibonacci tool, and you are going to anchor to the Asian high and the Asian low, okay. And then you are going to target one standard deviation. What do we say one standard deviation is? One standard deviation is simply you replicating the Asian range, okay, and projecting it either downward or upward. Maybe you have to listen to that again. You simply take this Asian range, the Asian range, okay, this high and this low, and then you project it downward like so. When you project it downward, it's going to give you one standard deviation. And since you are learning, one standard deviation is our lowest hanging fruit, so your take profit could be like so, which is 42 pips, and that would have been a very good trade, okay. I hope you understand this. Now you see how far the market went. The market actually did about 2.5 standard deviations, okay. And where did the market return from here? If you put your chart on the 4-hour time frame, you will notice that there is a very huge fair value gap over here. 4-hour fair value gap. That's why the market reacted there. Please, that should be your assignment. Just put your chart on a 4-hour time frame, and you are going to see this 4-hour fair value gap here, and that is why the market reacted to the mean threshold of that 4-hour fair value gap and then took off. Now let us say you were not able to sell over there, and then you waited for price to trade below the Asian range, right? Now what did we say? We said also that you can buy below the Asian range, right, when it takes sell side liquidity, but it actually went very far. What did I say? I said if the market trades below 3 standard deviations, then you should cancel your bias. But see, the market did 1 standard deviation here, 2 standard deviations here, 3 standard deviations. So you could actually be looking for buy opportunities at 3 standard deviations, and you'll still be okay. You'll still be very correct, okay. So you can actually look for entries one standard deviation below, 2 standard deviations below, or even 3 standard deviations below, and you will still be very okay. All right, I hope that is understood. Now let us do this. Okay, so this is 1 standard deviation, this is 2, and then this is 3. So you could look for your setup down here, and you'll still be fine, okay. All right, now we are only going to take 1 trade a day, okay. So let's say you only took a sell, and that was okay. right? So always pay attention to the midnight opening price because it is very powerful institutional reference point. So you could still sell here below the midnight opening price. There was a news event, so maybe you will have missed that entry, but that could still be another entry possibility, right? And this could still be a very good trade. Okay, so always pay attention to the midnight opening price because it is very powerful. Okay, so on a Thursday, what are we going to do again? We are going to take our vertical line and we are going to look at 8 p.m. This is 8 p.m. actually. You put your vertical line here and then you look for midnight over here, which is 00 hours, like so, and then you anchor that. So you are going to mark the high of Asia, like so, and the low of Asia, like so. Okay, that is going to give you a range actually. Let's change this color since you have been using gray. Let me reduce the opacity, like so. Okay, now the next thing you are going to do is you are going to mark your midnight opening price, which is over here. This is your midnight opening price. Now look at what happens. Look at what happens. You see, when the market opened, what did it do? It traded straight above the Asian highs. Okay, taking all the Asian highs, buy side liquidity that was residing above here. Okay, cleaning all of these highs here, all. You see, this is the manipulation actually. You see, so we can change this color like so that we can know that this is the manipulation. So what are you supposed to do next? You are supposed to wait for a market structure shift. A market structure shift actually occurred here. Okay, this is a market structure shift, and then you wait for price to, after this displacement, you are going to measure this low and this high, and you are going to pay attention to the equilibrium. Okay, you wait for price to trade back into this range, and you are going to look for any institutional reference point inside of this range. Okay, and you are going to look for sell opportunities. Why? Because we have traded above the Asian highs. Okay, when we trade above the Asian highs, what do we look for? We look for sell opportunities. Why? Because buy side liquidity has been graded. So if you actually took a sell here, let me do so. Let's say you sold into this fair value gap. This is a bearish fair value gap. Let's assume that you targeted the Asian lows, which is actually right down here. You will not have gotten it, which is totally okay, right? It's totally okay. Sometimes you are not going to have it, especially when the market is actually bullish. And one of the challenges is that when the Asian range is overextended, okay, this Asian range is overextended, sometimes it's very difficult to actually get measurement. Like this is about 52 pips. It's overextended. When you have an overextended Asian range, please, you have to treat carefully. Okay, another thing is that you can simply just measure the high like so and the low, and then you take the midpoint as your target profit. Okay, so this midpoint actually can be your target profit because it is overextended. Okay, so if you actually sold over there and you targeted just the midpoint, you will still make a lot of profit there. And you see how the market traded beautifully around this midpoint of the Asian range. You see, so you could still make profit by just targeting the midpoint because it is overextended. I hope it makes sense. Okay, I hope it makes sense. All right, let us look at what happened on Friday and see if we had a trade. Now same thing, we are going to pay attention to 8 p.m. which is actually here. It's 8 p.m. here. Yeah, sometimes it becomes very stressful to do this manually, but you have to do it anyways. That's 8 p.m. and then we are going to pay attention to midnight also, which is here. That's midnight. Then we are going to mark the high and the low. It's actually very simple. Okay, the high and the low, like so, and we are going to make it gray. You can use any other color you want. Okay, it doesn't necessarily have to be gray. Now look at what happened. And you are going to pay attention to the midnight opening price as well, like so, and you extend it across. Okay, now what is the condition? The condition is we want to see if you are bullish, we want to see a run on what Asian low sell side liquidity, like so. Okay, this is actually a turtle soup. Okay, ICT refers to it as what, a turtle soup. Okay, where they just weak you out and then they take the market in the opposite direction. You see, so you could actually be looking for what, buy opportunities right down here. I hope I picked the right tool again. Why do I keep doing this? I'm sorry. Like so, after a run on this Asian low buy side liquidity, you could be looking for a run on this Asian low sell side liquidity. You could be looking for buy opportunities, right? And what is the condition again? We are going to measure the Asian lows and the Asian highs, that range, and our target profit is just going to be what, one standard deviation above the Asian highs, which is actually this level here, 1.25903. so if you did that and you targeted just one standard deviation, you will have made 35 pips in the market, and that would have been a very good trade for Friday. So you see how beautiful this strategy is. Okay, you don't necessarily have to do a lot in forex, because forex is actually very complicated, very difficult. So if you can find something that works for you, just stick to it. Okay, just look for one thing, one strategy that works for you, stick to it, and you don't need to do anything else. And this is actually a beautiful strategy. So the market did not even go one standard deviation below Asia. Okay, it only traded above and then went one standard deviation and even more above the Asian range. So look at something here, look at how far the market went, 3 standard deviations right over here, right, which is actually very beautiful trade. You see 1.26262, which is actually a very key level, a very key level. Okay, now thank you so much for watching. I hope you understand what I just did today. Make sure you practice this, and we are going to meet next week, Lord willing. So try this and trust me, you are going to see a lot of opportunities in the market. Okay, try this, and thank you so very much. Thank you and goodbye.